Hi everybody, in this video I will explain about the second step in the accounting cycle. The second step in the accounting cycle is doing journal entries. It means that you have to record all business transactions in the journal. There are many types of journals. Commonly or typically, textbooks will explain at least 7 types of journals. The first one is cash receipt journal, and then cash payment journal, sales journal, sales return journal, purchase journal, and purchase return journal, and the last one is general journal. For this course, and for this video, I will focus on general journal only. It means that in this video, I will show you how to record all business transactions in the general journal only. Okay, so the first thing that you have to know is the format of general journal. The format of general journal is like this. General journal. The format is like this. You have to write the date of the business transaction, and then you have to show the debit entry or debit account, and then the amount related to the transaction, and then you have to show credit entry or the credited account, and then the amount related to the transaction. And also you have to write explanation about the transaction. You have to explain something like the transaction is about the owner of the business invested something into the business, or the business receive cash from somebody, or something like that. Okay, this is the format of the general journal. Okay, so to do the general journal, you have to know the rule of debit and credit. The rule of debit and credit. The rule of debit and credit is like this. So first, you have to remember the accounting equation. The accounting equation is assets equal to liability plus equity. Okay, so, and then remember, equity is related to 4 accounts. So equity is related to capital account, and withdrawal account, and revenue account, and expenses account. Okay, the rule of debit and credit says if assets increase, you have to debit the asset account. If asset decrease, you have to credit the asset account. And then for liability and equity, if liability increase, you credit the liability account, and if the liability decrease, you debit the liability account. For equity, if the equity increase, you have to credit the equity account, and then if the equity decrease or decreases, you have to debit the account. Okay, very easy. Rule of debit and credit. You have to memorize this. See here, asset increase, debit; asset decrease, credit; liabilities increase, credit; liabilities decrease, you debit. This one is same. So this is the left side of the accounting equation. This is the right side of the accounting equation. So this one is the opposite of this one. This one is the opposite of this one. Just remember this. Okay, so let's see how to do the general journal, or how to do the journal entries. Okay, I will continue with the step 1 that we have done in the previous video. So remember we have done this. Okay, this is we have discussed about a sample business, and then the business is a laundry business. We assume that you have a laundry business, and then your business has done 5 transactions. Okay, remember the accounting cycle. The accounting cycle explains about the steps that you have to do when you want to do accounting record for a business. So in this business, the business has done 5 transactions. So the accounting cycle is started when the business do a business transaction. So the first step in the accounting cycle is the analysis. So in this example, the first transaction done by the business is the owner of the business invested $20,000 into the business. So when the transaction happened, the process of recording is started. The first step in the recording process is to do this step 1. When the transaction happened, you have to analyze the transaction. After you have analyzed the transaction, you have to do the step 2 in the accounting cycle. You have to record the transaction in the journal. Okay, so the situation is like this. Let's say this is your business, and then this transaction happened. When this transaction happened, you know you have to start the recording process. You do the step 1. You analyze the business transaction. So from your analysis, the effect of this transaction on the accounting equation is asset increases 20,000, asset cash increases, and then the equity also increases. The account is capital, the amount is 20,000. This happened in your head. After you have analyzed this transaction, you record in the journal. So now we do the journal entry. The journal entry, we record this transaction in the general journal. Okay, so how to record that? Remember I have told you, when you want to do the journal entry or to record this transaction in the journal, first you have to know the format of the general journal. The second thing is you have to know the rule of debit and credit. Okay, so now the format is like this. So this, first you have to write the date of the transaction. So we assume that the date is 1. Okay, day 1 or something, or 1st of January or something. And then you have to show the debit account or debit entry, and the second thing is you have to show the credit entry. So when you have to show the debit entry and credit entry, this is the time when you have to use the rule of debit and credit. I have told you, for asset, the rule of debit and credit says asset increases or assets increase, you debit. Asset decrease, you credit. Liability increase, you credit. Liabilities decrease, you debit. Equity increase, you credit. Equity decrease, you debit. Okay, now asset cash increase 20,000. So remember, asset increases, so you debit. So you debit account cash. The amount is 20,000. And then the second thing that happened, or from the analysis, you have seen the second effect of the transaction is equity increase. the account is capital, 20,000. Remember, the rule of debit and credit says if equity increases, you have to credit. So the credit entry or the credited account is credit account capital. The amount is 20,000. So remember, you have to show the credit entry a bit in the right side. You cannot write in the same line, but you have to show the credit entry a bit in the right side of the your general journal. Okay, so and then you have to write an explanation. Here the explanation is supposed to be the owner of the business invested some $20,000 cash into the business, but it is not very important. I think the most important thing is you have to show the what is the account that you have debited and what is the account you have credited. Okay, that is for the first transaction. And then you have to do the journal entry for the second transaction. So what is the second transaction here? The second transaction is your business purchase equipment $6,000 cash. So when this thing happen, you analyze the transaction. Okay, when you analyze the transaction, this is the effect of the transaction on the accounting equation. Asset cash decrease 6,000, asset equipment increase $6,000. After you have analyzed the transaction, which is the step 1 in the analysis, you have to do the second step, which is record this in the journal. So now we record this in the journal. So the date is, here we use 2, and then the debited account or the account that you have to debit is, let's say, asset decrease. You have to debit or credit. Asset decrease, asset cash decrease, you have to credit the account cash. So credit account cash. The amount is 6,000. And then account asset equipment increases. Okay, asset increases, you have to debit or credit. Refer to the rule of debit and credit. Asset increases, you have to debit. So debit account equipment 6,000. Okay, see here. This is the thing. This is the second step in the accounting cycle. Done. So the thing is, every time a transaction happen, you analyze and then you record in the journal. That's the flow. Okay, now we see the third transaction. The third transaction is the business purchase supplies $500 cash. So you have analyzed the transaction, and the effect of the transaction is asset cash decreases 500, asset supplies increases 500. So what is the journal entry? So the journal entry is like this, the date, and then asset increases, you debit. So debit account supplies. The amount is 500. Asset decreases, you credit. So credit account cash. Credit account cash 500. Very easy. Okay, and then you check the transaction number 4. The transaction number 4 is the business made a bank loan of $10,000. So you have analyzed the transaction, and then you have to do the general entry or journal entry. So what is the journal entry? You refer to the format of the general journal, and then you refer to the rule of debit and credit. You will know that the effect is like this. Okay, the date is 4. If the date is 4th of January, you have to write 4th of January or 4th of February or any date. but here we have number, so we use number. So the date is like this, and then asset increases, so you know you have to debit the account cash. You have to debit account cash. The amount is $10,000. And then here liability increases. Okay, liability increases. So remember, the rule of debit and credit says when a liability increases, you have to credit the account. So credit account bank loan, $10,000. Okay, now this is done, and then the transaction number 5 happened. In the transaction number 5 is your business provided services to a customer and charge $100. The customer will pay later. So you have analyzed this transaction, and the effect is like this. The effect is asset account receivable increase, equity increases, the account is revenue. So you know the rule of debit and credit. So the transaction is number 5. Asset increases, you debit, so debit account receivable. The amount is $100. And then equity increases. So you refer to the account rule of debit and credit. When the equity increases, you credit the account, credit account revenue, $100. Okay, now you have recorded all the transaction in the general journal. See here. So step 2. Now you have done the step 2. You have recorded all the transactions in the general journal. Not very difficult. When you do the step 2, you have to refer to step 1. And then later, when you do step 3 in the accounting cycle, which is posting journal entries into ledger, you refer to step 2. When you do step 3, you refer step 2. When you do step 2, you refer to step 1. Okay, this is the end of the of this video. You can write your name and metric number in the comment section. Also, if you like to see future videos, you can subscribe this channel. Thank you very much.